For you guys today, I'm putting everything on the line and putting myself in danger to report something that happened that I think was either the worst case of negligence the world has ever seen or some of the craziest market manipulation we have ever seen in our entire lives in the crypto industry. People who don't live under a rock probably know that XRP dropped to $1.20 per coin. Bitcoin dropped from $120,000 to $102,000. And many other cryptocurrencies lost between 60 and 90% of their value in a very short time, only to quickly gain it back. Today, I'm going to show why Binance was at the center of this, what they could have done to stop it, and why I think they didn't stop it and made a lot of money off of it. The number of liquidations we saw today was by far the highest number that the crypto market has ever seen in 24 hours. Not just twice or 3 times. This is more than 10 times the number of liquidations we've ever seen in only 24 hours in the history of crypto. This is likely the biggest bankruptcy event in the history of the world's markets. This is completely crazy. That means the real number is a lot higher than I thought it was. This morning, it was said that over $16.8 billion worth of cryptocurrency longs have been closed out in the last 24 hours. Some of you might say, yeah, if you trade with leverage, you deserve to lose, or you're taking that risk when you trade with leverage. The trouble is that it is no longer a fair market when the people who make the markets are actively fixing them to make money for themselves and get rid of other people. This is no longer spread out. The market only serves the richest 0.1% of people who make billions of dollars at the expense of everyone else. All the individual traders who don't have access to inside information and can't open these short positions before Trump announces the tariffs. These traders have nothing to do with the market makers and can't make trades because they're being locked out of their exchange. This is not okay. Binance put out a comment about this, and I don't agree with it at all. They only said, our systems are under a lot of stress because the market is very active. Some people may occasionally have delays or problems with the display. We're keeping an eye on things and trying to solve the problem. The money is safe. Many thanks for your time. I want to tell you that they are saying this at a time when XRP is going to $1.20 per coin. It was trading at $2.80 an hour ago. Right now, people are losing billions of dollars, and this is the business nonsense that Binance is writing on their account. While these liquidations were going on, Binance could have done something to stop them, but they didn't. I will also tell you what they should have done and what they didn't do. As the most important exchange and source of liquidity, Binance had tools to stop this liquidation event. They should have moved faster, but the extra work caught them off guard. These are things they might have done and sometimes did, but it was too late. Use their own risk rules and what has happened in the past to decide when to deploy. The stop or suspension of trading is called a proactive halt or suspension. This is something that big stock markets do because it helps keep things like this on track. There must be something wrong with the market if people can't buy a crypto asset that's lost about 80% of its value in 45 minutes. There are people who can trade that asset, but they are probably insiders. So what you're seeing are strangers like you and me who can't buy the dips or do anything else while these other people can. There are also people with a lot of money who can massively manipulate the market and wipe out people because they can sell a lot of shares or open up huge short positions, which stops anyone from making any trades during that time. This stops futures and spot trades for risky pairs, which is basically what a proactive trading halt does. You could do this for Bitcoin, Ethereum, or any other cryptocurrency. It stops the flow of orders, stops price spikes caused by deep pegs and gap prices, and gives them time to fix the oracles so that prices stay stable. Dynamic margin hikes and circuit breakers are another option. These would raise margins automatically from 5% to 20% or stop trading for 2 to 10 minutes on moves of 10% or more. In fact, this happens quite often in the stock market. It protects both individual and institutional buyers in case crazy things happen that the stocks can't handle. In essence, this lowers leverage exposure before dumps and stops overly hopeful longs like the $16.7 billion that were sold here. It's also possible to use reserves to add liquidity, which would essentially mean pumping insurance fund or market maker quotes to close gaps and set deep pegs. After that, they could have made changes to the API engine to slow it down and added cross-margin protections. Really though, they should have had dynamic margin hikes, circuit breakers, and trading halts and bans in place before any of this happened. But they didn't. The one market maker that almost every exchange uses is this one, When you trade on Coinbase, BTCC, Bitfinex, or any of the other top exchanges, they simply use Binance's liquidity to make trades possible. They set the price of the market, right? In the crypto world, they are the person that almost everyone goes to. That is, if they aren't working right, then none of these trades are either. Furthermore, this leads to a terrible chain reaction in which everyone loses. The problem is that we can't do anything about it. Binance is the only one who can actually fix the problem. Don't you think that this $16 billion just vanished? Not at all. It went over to people who started short positions, traded, and closed positions during that time. But if you trade on any of the top 10 platforms, 90% of you watching this could not do any of those things. Over the course of this time, I tried to log into my exchange 10 times, but failed each time. I couldn't log in and change anything, so I had to sit back and watch my order go through. This is also true for a lot of other people. Some people were able to log in, but they couldn't close their position, so they had to sit there and watch themselves get wiped out. Or some people were able to log in, but the chart wouldn't load because the markets were so busy. That being said, the charts show that there was a huge sell-off, which is probably the craziest thing about it all. A huge number of shares were sold. Take a look at this. There are 3 lights here that will burn out in 45 minutes. One candle here shows that XRP is down 7%, and this candle shows that it is down 8%. A few hours ago, the price of XRP dropped from $269 to $219, and then to $1.20 on most markets. We've lost between 60% and 70% of our value in just 1 hour of trade. That is crazy. After that, right away, this crazy candle goes all the way back up to 280 all at once. How is that okay? How is that fair? No one could buy this dip, and the only ones who could were market makers and people who were ranking the markets. Now, these people aren't even doing anything about it. It looks like they just made a lot of money off of us. Some whales opened shorts and made a lot of money right here. I'm going to show you one of those now. In this case, we can only track a whale because they did this on an open source text, which you can see on Hyperliquid. That was just on Hyperliquid for everyone to see, right? This person closed about 90% of his short positions in Bitcoin and all of his short positions in Ethereum. In just one day, he made between $190 million and $200 million.